Good afternoon. My name is Cal Everett. I'm the president and CEO of Liberty Gold. Liberty Gold is focused in the Great Basin area of the United States, and we explore exclusively in the U.S. for Carlin-style gold systems. Cautionary notes and technical disclosures. I will make a forward-looking statement, and right now my wife and 3 girlfriends are in Whistler with enough champagne to drown a horse, waiting for the royal wedding. And so a forward-looking statement is I will not be talking to her tomorrow. So there's my forward-looking statement. This is what what Liberty Gold is. I'm a geologist with 25 years in the investment banking side of the business, and I'm going to give a different sort of presentation today. It's not going to be geological. It's going to be more sell-side banking and on current market conditions. And then I'll go briefly into these assets. So the company, our predecessor company, which was Frontier Gold, was sold to Newmont on the Long Canyon Carlin-style discovery for $2.3 billion in 2011. Our second follow-up company, which is True Gold Minerals, found, de-risked, and developed the Karma oxide gold system in Burkina Faso, and that was recently sold to Endeavour for $240 million. So the same geological team is together. They select all of our projects, and we're sitting in the Great Basin for 2 reasons. One, we're good at Carlin-style systems. Our geological team has 7 current operating profitable gold mines around the world that are owned by different companies. This is their next selection, but more specifically, in 2014, we decided to go into the Western U.S. for geopolitical security reasons. And since 2014, on average, every 6 months, one country in the world has become a no-go location, just for changing policies. And no shareholder of a public company of $1 billion plus wants to wake up in the morning to unexpected social or geopolitical shock. And the newest trends in that business of taking off assets comes from fraudulent environmental targets, unexpected non-paid taxation, to outright requesting a percentage interest in that project, to outright expropriation. And now that that template has been set, the pace of political change, of throwing on royalties and asking for interest is accelerated, and 4 more countries in the last 3 months have become no-go zones, several in Africa, but also in Central America. And so that's why we're sitting in the Western U.S. And we talk to a lot of public companies, and we've got 3 new companies from Africa, 1 from Eastern Europe, 1 from Australia with no project pipeline, and 2 from Mexico, 1 in a criminally difficult area and 1 in a safe area, and 1 Central American company who has contacted us since early February when our first resource came out. And this is a new trend of producing mining companies trying to move in to Canada and the United States of America for taxation security, proper government policy, but more specifically, protection of their net after-tax free cash flow. That's the new trend in the mining industry, and that's why you're seeing so much interest of other country producers moving into this jurisdiction. Here's the management team. Quickly on capital structure, market cap of 70 million Canadian, approximately 9 million cash. Our principal shareholder is there, Van Eck, not the GDXJ, but the Resource Fund owns 9%. Resource Capital Funds just bought 8.4% of the company. Newmont and Teck, for historical reasons, are shareholders, and management and insiders own 6.3% of the company. This is how our geologists do it. So these are the 3 projects in the States. All of these projects are historical run-of-mine oxide gold producers from a $300 to $350 an ounce gold market. They all came with a historical database that aggregate over 4,500 holes. Our geologists take these databases. They're comfortable with the metallurgy because they're past producers, so that box is ticked. We reassess that data, and then we go on and we take them for a drill, start drilling them. Goldstrike took 17 months before the first hole. Black Pine took 7 months, and Kinsley came with the data already looked after. Just quickly, this is our core project, which is advancing further than the other projects, basically because it's been taken already to a PEA decision, which is active and should be released whenever in approximately 2 months. 209,000 ounce past producer from 12 shallow pits, but it had a run-of-mine recovery in the early 90s of 75%. It was extreme with regards to metallurgical recovery and recovering your physical gold. We put out a resource in early February, and this is based on 1,730 drill holes. We put over 500 holes in this deposit last year, and we did not finance once. And 75% of this resource is indicated, with 3 holes within 50 meters, and the other 25% is inferred with 2 holes every 50 meters. And if it doesn't have that range, it doesn't pull a pit yet. So this is just a portion of the deposit. This resource came in at an average grade of 0.53 grams, and this is what triggered us to make a PEA decision based on this initial resource. This is a map just showing the entire property area. All the black constrained line is the pit constrained resource. And that comes in at a projected strip ratio at 1.5 to 1 or less. And it's a gently dipping sheet, but it's moved by imbricate faults. But at this point, we're projecting approximately a 6 to 7 year mine life at approximately 100,000 ounces of production a year, and that's what we're looking to show in this. But the key point to this is what we discussed with the producers, it's strip ratio. These are earth-moving operations. If it was 3.5 to 1, 4.5 to 1, this is waste, and it's not ore. Because it's going to cost you approximately $250 a ton to get it from blasting it and dump leaching it. And the distance is short, and this is why these projects are economic and why they're coveted. This is a summary. Just look at the run-of-mine stuff, and this is showing Newmont, Kinross, SSR, and New Gold's operating mines. And these are run-of-mine. A lot of these other names, we don't know. They're 3-stage crushers. They've announced agglomeration. But the average grade of the producers, the big producers' run-of-mine grades, is 0.5 grams. Our grade comes in around 0.53, so we're right in line with that number. The average recovery of a run-of-mine operation from the majors is 68.7%. Our numbers are approaching 80%, with a qualifier that historically it was 75%. Hence, this is why there's interest in the company, because these things are tough to find, but the strip ratio, I'll go right back to it, is absolutely key to pushing these deposits further into our production. This is the metallurgy. So we did 20 column tests. The chart shows the recoveries, but the key on the chart is in this deposit, which is unique geologically because it's been shattered and reshattered and mineralized in a second event, the gold is all on the fractures, and you get 80% of your cyanide soluble gold out of this system in less than 10 days or less. So it will cash flow like a dream. The last project is, I got a minute. This is our second project in the pipeline. I purchased this for the company for approximately $1 million in 2016. And this is the past producing black pine mine of Pegasus before it went bankrupt on Mount Todd. And we paid about $1 million for it. But after we bought it, we found the historical data of 1,866 drill holes, all of the blast hole data, everything we needed to reinterpret this deposit. And we've now got another oxide system, but this grade is higher. It's 0.63 grams, but the historical metallurgy was 65% recovery, so lower than the current run-of-mine average recoveries. This is a great map because it absolutely has no geology on it. And so this is the depth of drill holes. And this is scientists plotting that 95% of these holes are 300 feet or less. And it hasn't been right. It's got to be drilled deeper, and it's got to be drilled in angle holes. This is a recreation from the data of mined material over unmined material in gold. This is what's unmined. So the records show that approximately 700,000 ounces of 0.6 grams of oxide are unmined. What's key here is all these red squares are soil samples over a 2 to 3 square kilometer area that run 0.1 to 0.5 grams gold in soil. And I'm out of time, and that's the plan of operations. That is the proposed exploration project, and I'm done, and I thank you for your time.